Hello guys, welcome back. My name is Bilone, and in this video, I'm gonna show you how to use just these two candlestick patterns to understand market structure better. Okay, and by the end of this video, you are not going to look at your analysis again and second doubt whether you are correct or you are wrong, or whether your bias is correct or your bias is what wrong. You are just going to use these two candlestick patterns, the bearish engulfing pattern or the bullish engulfing pattern, because that is the opposite. And the inside bar, right? What is mostly called a harami. This one is the bearish inside bar, but you can also have the bullish what inside bar. Okay, it can be the opposite or vice versa anytime. All right. So if you move on to the lower time frame and you check the higher highs and the higher lows that the market is making, it just revolves around what candlestick patterns. When you move on to the higher time frame, you're going to see that it's just a candlestick patterns. Okay. So for instance, if you have the market moving up like this, making clean higher high, higher low, higher high, and instead of making another higher high, it makes what? It makes a lower low, right? Now, when you move on to the higher time frame, you're going to see that this pattern that most traders base on to take the trade is most of the time just a bearish engulfing pattern on the what? On the higher time frame, right? In the opposite direction is going to be a bullish engulfing pattern. But let's look at it from the bullish perspective, sorry, the bearish perspective. This is what a bearish engulfing pattern. Then you also have the inside bar. Okay, so when you see a pattern like this happening on the what? On the lower time frame, it's just an inside bar. Okay. Now, the most important thing is not just recognizing this pattern, it's recognizing what you're supposed to do when you see this pattern forming, how you are supposed to what approach the market. All right. So for the bearish engulfing pattern or for the engulfing pattern, it is just straightforward. Okay, so when you see the market breaking a low like this, let me mark this from here to here. When you see the market breaking a low like this, the most obvious thing to do is to wait for a pullback like this so that you can sell the market. Okay, that is just direct for this one. There's no further explanation to this one. Wait for the market to retrace to another block, a fair value gap, or the strategy that you trade. Okay, so that you can take the sell from this area and target this lows that is sitting right there. All right. Now for the inside bar, it is a little bit what tricky. Okay, because this is the overall swing. The swing point started from this area. This break that you see over here is not a full break of structure, sorry, a full change of character. It is an inside change of what? Character. So if you want to take a trade like this, or if you want to take a trade from this point, the best thing that you can do at this point is to wait for the market to retrace a little bit. Like you see, for that portion, it resembles something like this. Okay. You wait for the market to break the low, wait for a retracement, and sell the market to this low that is sitting right here. Because two things can happen over here. Two scenarios can actually happen over here. First of all, you can have the market do something like this. You can have the market make, you know, a high and continue the upward move like that, right? Because don't forget that this move is simply the market coming from a previous what? A previous low. So it's something like this. It's coming from a higher low. It's just coming from a higher low. So a higher low makes a higher high. Then it starts trading within the what? Within the leg of the higher low. Okay. So at this point, if you try to short the market targeting the overall what? Overall higher low to be taken, you are going to most of the time find yourself on the wrong side of the market. Okay. So you just have to be able to what? Catch the market at the top over here so that you can mitigate your stop loss aggressively before the market reaches this point. So that if it doesn't break the low, if it doesn't break the low that is sitting right here to continue making lows and reversing the trend, you will still be taken out at break even without taking full stop loss. All right. And the next scenario that can happen with the inside bar, like I said, there are two scenarios. The first scenario is this one, and the next scenario that can happen with the inside bar is this one. Very simple, right? So you have the momentum leg, then you have the market building something like this. Let me reduce the momentum leg, right? And you have the market building within the momentum leg. It makes a low, then it breaks, right? Then a red test, then a continue what moving up. Right. So at this point, this is going to be the low, overall low, right? The low of the higher low, like this. Okay. So this is the point that could have reversed the market. The market could have, gotten here and just traded up like that. Okay. So the best way to trade this is to catch the market at the top over here so that you can sell and mitigate your stop loss aggressively before it reaches this zone. So that in case the market says that, okay, I'm not going to continue this move lower and I want to trade up, you are just going to be taking out at what? Break even without taking full stop loss. All right. If you are not able to catch the market at the top over here, you wait for the market to break the overall low. That is the major what? The major change of character or the major change in state delivery or whatever. The smart money concept traders know this. So they wait for the market to what, break the overall low like this. Then you wait for a pullback inside the range or maybe a retest at this level and maybe into some other block, some fair value gap or inverse fair value gap or whatever. Then you what? You short the market. It can be a fib level anywhere, right? Then you can short the market from here to here. The work is done by understanding what the market structure. And trust me, this sounds very simple. And that is the power of this thing because it is very simple but extremely what powerful. When you move on into the chart, you understand that every market structure that you find is revolving around these two things. It is revolving around either a bearish engulfing pattern or a bullish engulfing pattern. It's also revolving around what? An inside bar, right? The market is either trading within something or it is either what? It is either, breaking some structures and continuing the what? The move down. So let's move on to the chart so that you get to see more examples. So let me remove everything from the chart so that we have a clean chart to continue with our analysis. Gonna be control. All right. So now we have a clean chart with what? With gold USD, and we are just going to use that concept to do a top-down analysis and form a bias. Right. If you follow this, it's gonna be extremely simple. Very, very simple. You are most of the time going to be on the right side of the market. You're not going to second guess anything, and all your analysis and everything is going to be what? Mechanical. Okay. Very, very, very simple. All right. So let's move on into it. So let me go to the weekly time frame and let's see what the weekly time frame is doing on gold. So on gold, what can you see? You can see that we've traded down. We've traded to these lows that are sitting right here. But the most important thing is to realize where we are. Okay. Are we within an inside bar? Is it an inside bar trading that we are doing right now? Are we doing an engulfing candlestick pattern trading? Right. So what you can see over here is that you can see that the market went down with great momentum like this. Okay. But what has happened? We see that the market is trying to trade up, holding the momentum up. Okay. What did I say about the inside bar? Most of the time, the candle can just get somewhere here and reverse, right? So we can get here and still drop on a weekly time frame. Okay, it means that we can move to this area and still what? Drop. Okay, I hope you see what I'm trying to point out because this candle is a full bearish candle. We have the high of the bearish candle over here, and we have the low of the bearish candle. Sorry about that. Have the low of the bearish candle sitting right here, and we are trading within the bearish candle. Okay, so based on what I told you, it means that we can simply what? Get here and drop. Okay, we can simply reach this area and what? And drop. This is very, very important. So we can do something like this and we can still drop from here for gold to continue the bearish what? Trend. Though that is low probability because of the nature of gold, extremely bullish asset. But based on technical analysis, we can have that what? Argument, right? Another thing that can happen is that we can keep on trading like this, consecutively like this, get to this area at the tip of the what? At the tip of the bearish range, which can still drop the market, like I said. But in this case, we might not drop. We might break above it and continue what's boarding above it, what like that. Like I told you from the what from the scenarios that I did when I was showing the inside bar structure, right? So we can trade the supply zone somewhere here and drop, or we can trade, test the supply zone, come back, go, then make a pullback above this area. So trading around this zone is what is dangerous. But if you have more confirmation, you can want to do it. The best way to do it is to wait for a reaction, right? So if you get a reaction like this, the market starts dropping, you can find yourself an entry to go short. But if you break above the supply zone and make a retest over here, you can continue to move up and what and ride the bullish trend that is what already happening on the lower time frames. Okay, so that much I do. Let's continue with the top-down analysis. And by the time that you complete, you are going to see that you're going to have an easy bias. And we didn't actually do anything, no deep thinking, nothing. Simple, mechanical, and easy to follow, even for a beginner. Okay, don't complicate shit in trading. Do not complicate anything. Make sure things are clear because the market is already a little bit complicated. If you come to the market making things extremely complicated, you are going to have yourself to blame, and you are literally, it's not going to go well for you. Okay, that is just the truth. That's the truth. Okay, so let's move on to the daily time frame. Now that we know that we are within a weekly range and it can drop from here, let's move on to the daily time frame. Now on the daily time frame, what do you see? Let me see this thing is recording because I did a recording and it didn't do. Okay, we are good to go. So we have this weekly range that I say we can drop from. We can get here and drop still, right? Let's look at what is happening what on the intraday what perspective. Now on the intraday perspective, what is happening? You can see that we were trading within this what within this bearish range. You can see this bearish candle that is sitting right here. This bearish candle. You were trading within this bearish candle. Okay, so the probability that we could have, just come up like this and drop was high. It was there, but the market failed to do it. It's still building the what? Building the bullish structure. So let me mark the bearish candle that we are trading within so that we know where we are when we move on to the lower time frame. We haven't broken above it. We just wait above it, which can just be a liquidity sweep for the market to what? Drop down. Okay, but let's just focus on that. Let's just focus on the fact that we are trading within this, bearish candle from here to here. We are trading within this bearish candle. Okay. Now let's look at the structure that the market is pulling up with. Let's look at it very closely because there's something that I want to point out or want you to see. Okay, we traded bullish and this bullish candle came and broke above the high of the previous bullish candle. This bearish candle came and is breaking above the high so that what the previous bullish candle, which is obvious. But pay attention to this. We have this bullish candle, but it's still within this bearish candle. Okay, we have this bearish candle. It's still within this what bearish candle. Now this is very very important because the drop that's happened on gold. Let me show you something. A drop happened on gold. A drop happened on gold. You can see this area. Pay attention because this is extremely important. You want to understand market structure, market mechanically, most of the time be on the right side of the market. This is the best thing that you can do. Everything that is happening right now is an inside bar. We don't have an engulfing candlestick pattern yet. You see, this one over here was an engulfing candlestick because it wasn't within the range of this bullish candle. It closed below the bullish candle. So you could have anticipated straightforward that from that point, the market can just what move up here and what drop. So this anticipation was what was there. Okay. Now let me show you what I wanted to show you. We have this bearish candle over here, the huge bearish candle. We have the high of the bearish candle. Okay. Then we have the low of the bearish candle. Can you see that? Now, all this bullish move that was happening, where was it happening? It was happening within the range of this bearish candle. So this was a harami, like an inside bar trading. So what did I say? I said that you can have something like this, right? A huge momentum down. The market can start building down slowly. As you can see, it was building up with this what consecutive bullish candle, building up slowly, building up slowly, and when it gets to the top, you have two scenarios. Most of the time, it will be a supply zone on the left side of the chart. You have to be able to understand supply and demand and mark your other blocks. If you don't understand that, you can leave a comment in the comment section and I'll make a video on that for you to understand. So what can happen is that we can get to this portion, okay, and we can just break the high, retest it and continue moving up. So one scenario is like this, retest it and continue moving up. The next scenario is that we can get to this portion, go and move down, right? So if you look at the price action of gold, what was the scenario that played out? The scenario that we can get to this portion or this area that is sitting right here, fall and start moving up. That is the thing that we printed over here. That is what we should have known. That since the market is trading within the range of this bearish candle, we can still drop. But people were screaming gold buys, gold buys, gold buys. I was there and I was monitoring the market because I knew that if we shift structure over here, we fall to continue higher, then we make some kind of a bullish and engulfing pattern or let's say a market structure shift, we are going to drop, right? And we did drop and I caught the market around somewhere here, right? I couldn't catch it early. The last week I was still, looking for some confirmation, but it didn't come. But it came the previous week, and I caught the market somewhere around here before all this was we printed. Okay, because I knew what I was doing and how I marked my market structure was, on point. It was mechanical and it was not subjected to what doubt or subjectivity. Okay, so let me just remove everything here so that we continue the top-down analysis that you were doing. I hope you understand the example that I showed you because it's very important. If you don't understand anything, you can still ask in the comment section. I'll come and reply you. Very important. Okay. So we were in the power time frame. For our time. Okay. Sorry, we're on the daily time frame and I wanted to show you something. So we are still within the range of what this bearish candle, like I said, we haven't broken out, though we have broken out, but it's just a week. Okay, so I doubt that the move is going to continue up, but if the technical analysis shows that it's going to move up still, we are going to align ourselves with that. Okay, but if you check the market again, you see this bearish candle that is sitting right here, and you see another bearish candle. Just remove it. You see another bearish, sorry, the high of the bearish candle here. They have the low of the bearish candle sitting right here, and you can see that all the moves that is happening right now is within this bearish candle. So what is the scenario again? You can do something like this, up, break, and continue moving up, or you can just what drop. Pay attention. And if you are dropping, we are dropping either to the lows of what this candle that is sitting right here, because we are still within the range of this candle. So if you are dropping, we are dropping to the lows around somewhere here. Nothing is going to stop us. These candles are not going to be able to stop us. Most of the time, we are dropping to the what to the lows. If you check the weekly time frame example that I showed you, when you dropped, we dropped into the low of the what of the range before we started building up another what structure or another price action. Okay, so this is one scenario that can happen. The next scenario that can happen is that we can still build something like this and break the high, this high that is sitting right here. We can break it like this, retest it, and continue moving up. Okay, so expect these two scenarios from gold. Expect these two scenarios from goals. If we get the market trying to fall to move up higher, it means that this whole thing that is building up is what might just fall. This whole structure that is building up might just fall. The market will just go from here and come and target this low that is sitting what right here. Have you seen how mechanical this thing is? I'm not doubting anything. I'm not saying, okay, we might do this, we might do this. I'm saying we are going to do this, we are going to do this because the rules are clear. If you don't see the rules, you just stay out. But because the rules are clear, we are applying the rules, following the rules, having everything in a mechanical and in an objective way, and actually doing the thing. Okay. All right. So let me just remove this. Let me just remove this. And let's move on to the lower time frame. Okay. Somebody can argue that we um we are, this bearish candle that is happening is still within the premises of this bullish candle. So we are still what bullish. Yes, we are still bullish, but we are still within this bearish candle. So we might be bearish. Okay, so we just have to be able to nest it correctly. And the more you try to nest it too much, the more complicated it becomes. And we know that in trading, you have to make things simple so that we become more profitable. The simpler the thing, the more profitable the thing. The more complicated the thing, the lesser it is to produce consistent result because you can't apply it consistently because of its complexity. Okay, so let's move on to the 4-hour time frame. Let me show you. I think this video is getting too long. I didn't plan for it to get this long. Let me check how long it is. All right, I think it's okay. 18 minutes, maybe some 20 minutes, then we can have video. All right, so we have somewhere here. So you can see something very important. This is the low of the bearish candle that I marked. Sorry, the high of the bearish candle that I marked, and this is the low of the bearish candle that I marked. Well, I said that the market can trade up and what and reverse from here. So we traded up and it came to what this supply zone that is sitting right here. Can you see the supply zone? Let me remove the intensity and the carrot to something soft. Okay. Right, you have this supply zone that is sitting right. So the market came to the supply zone and started moving down, but it's not able to come to the range low or the low of the bearish candle. So it is still within the range of the bearish candle. So what can happen over here is that two things can happen. Okay, two things can actually happen. We can still trade lower and come and take the range, like I said, because most of the time when you are within the range of the candle and we fall, we come lower and come and take the low of the range. But if you don't fall and we still within, then it means that this bullish candles over here is still going to hold a structure and are going to what move up possibly. On the daily time frame, we saw a bullish candle sitting there. Hope you saw it too. Just lines. I'm just drawing lines. By the way, trend lines do not work, so don't start the trading doing trend lines. See this bullish candle? So this bearish candle is still within this bullish candle, right? So we are still bullish though, right? So since we have mitigated something over here and we want to drop, that is why the bearish candle is what forming, right? But immediately we fail to break within the low of this range, it means that we are still bullish because we are still within the range of the bullish candle. So the bearish candle is just reacting from the supply that is within the range of the overall bearish candle that we are in. So after it is done reacting but could not break below the low of this bullish candle, it means that we must still be bullish and might still be continuing what higher, right? So somebody must ask me, somebody might ask me, sorry, somebody might ask me, where are we going, right? Where is the market structure building towards? Where might we, move to or whatever? Okay. Now don't forget that on a weekly time frame overall, we have the market having a supply zone here, right? It started moving from here. This is the area where this whole drop was initiated. So we are possibly moving to this supply zone, which can still drop the market for the market to come and take the range, the low of the range. Okay, so like I said, you can have something like this. I'm applying the same concept. I'm not changing anything. Okay, you can have something like this and drop. Okay, or you can have something like this, break the high of the supply and continue what holding out from there. Simple, mechanical. I'm not doubting anything, doing everything what objectively. I hope you understand what I'm trying to say. All right, so let me move on to the power time frame. So this is the low of the what of the bullish candle that this bearish candle is what trading within. Okay, so that is the low. You have to understand that. Let's move on to the 1 hour time frame. Okay, so this is the low of the candle. This is where we reacted. Okay, this is where we reacted for the overall bearish range. And this is the bearish market structure that could not what break the low of the bullish range that it was within on the daily time frame. Okay, so what can happen most of the time, or what can happen here is that since this is the overall range, bullish range that this bearish reaction cannot break, you can have something like this. You can see we already have a change of character over here. So this, like that, like I said, I showed you at the beginning of the lecture, this change of character can just be a bullish engulfing candle on the higher time frame. Okay, then we can do something like this and continue what moving up since we failed to what break the low of the range. Have you seen how simple this is? And let me verify the fact that this is just a bullish engulfing pattern. You are going to see it. It's very beautiful. It's just simple, beautiful, mechanical. Okay, just remove this. Boom. Have you seen bullish engulfing pattern? Just a bullish engulfing pattern. And we are trading down within the range of the bullish engulfing pattern. So we are still bullish. We are not bearish because the range of the bullish engulfing pattern is containing the price action. So what can happen here is that we can do something like this, come lower and start moving up. Simple. This is not complicated and it's not supposed to be complicated. This is easy if you are applying the rules. Do not make it complicated. Do not come here and say that, okay, we have a fair value gap over here. This fair value gap can move price down. No, that is shit. The fair value gap is not going to do anything. The fair value gap is just shit. Okay, everything works when you're applying it in the right context, but you can't just be marking things and hope that the market is going to react to them. No, it must align before the market can do anything about it. Okay, so that is that. I hope this thing helps you because it helped me a lot and it helped me to remove a lot of noise when reading market structure. And most of the time, it helps me to align myself with the best direction of the market and always catch what big moves. If you don't understand anything, you can leave a comment in the comment section. Like I said, I'm going to come and clarify everything. Okay. I think that will be all. And if you need more examples too, you can, tell me and I will do more examples on these things for you. All right. Don't forget also to like and subscribe and help us grow the channel. All right. So bye. Have a nice day.